Alrighty, good morning, good afternoon, good evening, traders, and welcome to the showdown. You'll probably be surprised that it's only me here in the session today, and that's because I'm going to go ahead and dive into some trades. Cameron, unfortunately, could not make it today. He asked if I could go ahead and run the show for him today because he's not feeling up to it based on the fact he's got a sore throat. I think it's all BS. I think he's just scared to take a battle today. I'm just kidding. All right, traders, we're going to go ahead and get started this morning. Remember, traders, we're going to go ahead and look at some currency pairs. We might even actually go ahead and explore a little bit outside the pairs that we do. Just go ahead and analyze a couple of more pairs. But let's go ahead and dive into the market this morning and see what is setting up. Get your pen and paper ready. Obviously, get your trading accounts ready for those that want to go ahead and follow along the way. And we're going to go ahead and get the show rolling. So I will see you back after this. Alrighty, traders, welcome back, and I'm busy opening up my my VPS here so we can go ahead and get those trades implemented this morning. And let me go ahead and make sure I have what is needed in order to be able to get this done. And I think I do have it locked and loaded here. Let me double check here. All right. Okay. Good morning. Happy Friday, everyone. All right. Happy Friday. Let me pull this over to the side here so we can use this to go ahead and implement some trades. And there we go. All right, perfect. So let's go ahead and dive into some trading opportunities this morning. Once again, hopefully everyone is having a good week so far. I know that there was some some Canadian data that was released early this morning. And that Canadian data did go ahead and create a good sort of vibe in the market. And if we go take a look over here at the news, we can see here, this is it right here. We had the unemployment rate for the Canadians and employment change that came out. Positive numbers. I mean, this is just what we needed for the Canadian to make its move today. And so we had that news coming out today. We're going to go ahead and see if those pairs that we're following actually did something good this morning. And let's take a look and see how it's set up technically. So I'm going to jump into firstly you've got the New Zealand CAD right here. Now we all know that the New Zealand CAD is getting stronger, and so it's trying to fight this move that we saw in the news, and so even with the news out this morning, we've seen that the New Zealand CAD is still sitting inside this range. The question here is, does it break out above, or is the news out today enough to be able to bring it back down again to the support and break to the downside? Well, I'm going to go ahead and break it down from a lower time frame. And I'm going to do this. Let's take a look here. So we actually got a lot of room for the market to move to the downside right here. Let's go to the lower time frame. Now, if we go to the 1 hour time frame, we can see that the market is range bound here. And certainly the movement that we had this morning does indicate that price could move back down a little further. With an overbought condition right here, I'm going to say that at least in the short term, I still think that we're going to be range bound. But at least in the short term, we can see that there's about 50 pips to the downside. And to the upside, we have approximately 44. Now, the thing is here is if I sell New Zealand CAD, that means making 20 pips should be easy. If the market goes up and we've got a 44 pip rally here, then that means if I re-enter once again at 25.25 right here, it means I may have 3 entry points on this. Because we're at right now, I'm going to go ahead and say sell New Zealand CAD. That's my play today is sell on the New Zealand CAD. Let me go for New Zealand CAD right here. There it is. I'm going to go ahead and sell New Zealand CAD. And by the way, I'm using a tool called the Pip Hunter Trading Tool. This is something that our students get as a member. If you want to check it out, make sure you go ahead and check out TradersNetworkClub.com, and you can get all the resources right there. Now, with that being said, I'm very eager to jump back into a Canadian US dollar CAD position right here. Now, we've been talking about market sentiment, and we know that the contrarian sentiment is still bullish on the US dollar CAD. Well, if you look at this purple line right here, this is a 200 EMA. And the 200 EMA states that the US dollar CAD is still currently bullish. But what goes up must come down. I spoke about this many times before. And so if I look over here on my daily time frame right here, I do want to see, of course, at the end of the day, it's going to come down to how the daily candle closed out. But I do want to see the US dollar CAD continue to fall and take out the low right here. And once it takes out that low and trades below that, we could end up heading down towards that 133 level. So 133.8 and 133.66, 133.100 is probably the downside target for the US dollar CAD. Now, we know that the CAD is not the only one that's going to be affected. We're getting strong CAD out this morning. But we also know that US dollar is also being affected, and therefore we'll look at the euro US dollar as well. But in the meantime, I'm pretty comfortable going ahead and selling on this pair. Now, I'm going to say that this 200, which is at around about 36.12, is going to be a bit of a support level. We've got a weekly pivot point down here at about 35.70. That gives us at least a well, from which trading right now, at least a 50 pip grab to the downside. We're not in oversold yet. I think I'm going to go ahead and sell, even if the market pulls back up a little bit. I'm going to go ahead and sell on US dollar CAD. Now, I've gone ahead and entered. Now, just FYI, if you want to follow along, you can go to check out in the description down below. There's a Telegram channel. Check out the trades we're actually implementing and shooting the trades out. So all the trades that I implemented this morning, we are getting these actually posted in the Telegram channel, and it's absolutely free. So check it out. Go ahead and check out the Telegram channel. Now, next is, we're going to go to, let's go take a look at the Aussie. Now, the Aussie CAD, we're currently at, let me go ahead and clean up house here. All right, well, this is the thing here. With Aussie CAD, we can see that the market created this 5-wave structure. We anticipated price to hold here and chase off the lows, which it did. Now the question is, are we seeing downward swings? The answer to this is that's correct, yes. I'm actually seeing a downward trend. We're trading below a pivot point right here. We're at an overbought condition. I think that the Aussie CAD will continue its downward trend. And so I'm going to go ahead and look at these swings right here and state that the market is chasing after a low down here that is also chasing after my 1.27 down there. So therefore, traders, I'm looking to sell Aussie Canadian dollar right here. All right, that is that simple. Using this tool is it can get us into the trade very quick and very simple. All right, the last currency pair that we have right here is the CAD Swiss. And I'll tell you why it's the last, because we're already in buys on the euro US dollar from last week. All right, we're carrying 7 positions from last week, and it's looking pretty good for right now. So right now, my break even on the euro US dollar is around about 764. So 764. We're trading at 734, so I've got about 30 pips to go before I get to my break even. But let's take a look at the Swiss right here. All right. The Canadian Swiss, obviously with the news coming out this morning, that's created a nice little bump for the CAD Swiss. The question here is, and that's been something that we've been talking about inside my other sessions, is that we've got multiple milestones. And we're currently trading at this milestone at 1.065. I'm eager to go ahead and buy on this. I know that we're at resistance, but the thing is here, if we break resistance, which I'm expecting, we're never going to come back down here. So selling right here would almost be not a good option for us at this point, but bank for the breakout. So I'm going to go ahead and bank for the breakout towards the next milestone, which is at 6,600. So I'm going to go ahead and add in a buy here. I'm going to buy the CAD, and there it is there. I'm buying the CAD Swiss right now, looking for the market to break through that milestone. If I go ahead and take a look at the price is at 38, and the milestone is at 40. So yes, so we can see at least about a 60 pip rally towards this area. Now, traders, I'm going to go ahead and say this. My sentiment indicator is still bullish on the CAD Swiss. So which means that even if the market doesn't break through that resistance and it comes back down here, then we're probably just going to see the CAD Swiss still range bound. But ultimately, we want to see if the jobs that came out now is in fact enough to be able to stimulate the CAD to push it through that level. Because remember, if jobs are up, that means spending is still going to be up, which means that consumers are still going to be spending money, raising up the inflation rate. And if the inflation rate is rising, then of course hikes in the interest rate may still be on the table, and that is positive for the Canadian dollar itself. So again, positive move to the upside is expected on the CAD Swiss, especially after the data out this morning. All right, traders. Well, that covers our usual pairs that we follow, and I'm going to take this to the next level. Let's go ahead and talk about, while we're waiting for those trades to go ahead and play out, let's talk about market sentiment and contrarian sentiment. And what I want to do is I want to go ahead and show everyone a little bit more about what the market can do based on, or what at least the market does based on contrarian and market sentiment. And so what it really boils down to, I don't know if many of you have found that you've got if you go to my FxBook, you go to click onto, I think it's under market right here. Under community, click under community right here, and you go to sentiment right here, and you'll come to this. I'm going to go ahead and refresh this. And so if you take a look over here, we have to understand, this is very important, we have to understand that 90% of retail traders are actually losers. According to statistics, 90% of retail traders actually lose money. Now, there's a lot of very reasons why retail traders lose money. Number one, they're very new at trading, and so they're not educated on how the market moves. They're not educated on how equity management is applied to trading, and the one thing that blows up traders' accounts is that they're over leveraged because they don't understand how to manage their risk based on the strategy that they're following. And I say that with the confidence here that if you're not understanding the strategy, then you cannot understand how to manage your risk. So you have to first understand the strategy that you are going to apply to the market. And once you understand the strategy, then what you'll do is you'll apply certain risk parameters that will go ahead and allow you to be able to manage your positions so that you don't get over leveraged. So retail traders lose 90% of the time for multiple reasons, and some of them what I've just mentioned. But then that means that we have the 10%, right? Now, just based on this rule of thumb right here, or at least based on these statistics, all right? It's really not a rule of thumb, but it's more statistics. Based on these statistics, think about brokers. If I was a broker, if you had to place a buy or a sell, wouldn't it be in my best interest rather to trade the opposite side? Now, I'm not saying all brokers go ahead and do that, but as a portion of their book is where they offset your trades with the interbank, which means other liquidity providers, or they go ahead and they trade against your position, which means they fill your position. So if you buy euro US dollar, they would go ahead and sell euro US dollar, which means they're taking on your position. Now, all brokers have risk assessments, all right? They have risk managers that go ahead and they separate the books. We talk about books, we talk about traders. They separate traders that are showing that they know what they're doing and they are successful against traders that don't know what they're doing and they've got a good chance that that trader is going to lose money. And so what they do is they separate these books. The book that is showing that they know what they're doing, they're making some money, they go ahead and offset that with the liquidity providers that they have. The other book, which is the 90% of traders that are failing, they take that book and they move that book to their own sort of offsetting, which means that they are filling your positions, which means they traded against you. And the reason why they're doing that is because they know that statistically the house always wins if 90% of the traders are losing money. So what does that mean? Oh, brokers are scary. No. If you're successful, you'll be moved into a book where they're going to offset you the interbank. It's not going to affect you at all. But if you're not successful, then yes, you will be part of that book where you know your broker's making money off you. Because this is a zero-sum game, right? Somebody's making money and somebody's losing. It's got to work that way. Someone's got to pay somebody. Now, this is the thing right here. When we talk about contrarian sentiment, what we're looking at is when you see retail traders, specifically here on the euro US dollar, if you see that retail traders are 84%. Now, I want to go ahead and just be clear about this. There aren't as many traders busy linking up their trading accounts to the MyFX book. Some of these are demo accounts, not even live accounts. So the statistics here that we're getting here might not be as accurate than getting it directly from a broker or from a source that gives you a big data or large data based on buyers and sellers in the market. Now, if you look at this right here, and again, you got to look at the retail broker that you're getting the information from too, and how that information is supplied. But here it is. If retail traders are 84% long on the euro US dollar, what do you think the market's going to do? In most cases, the market's really trending bearish on the euro US dollar. Now, I want to go ahead and say something very clear about market trends and everything else that goes. This is the deal right here, traders. There are different ways to trade the market, right? There is a way where you go ahead and look for the trend, you sell here, and you put your stop way up here, and you're looking for price to go down towards a target, maybe a Fibonacci target, maybe a good support level, and then you go ahead and you close out there, and you close out your 300, 400 pips on the trade, all right? But you're entering one trade, and you're holding that position with a stop loss up here. I mean, that's trend trading. And you can trend trade based on different time frames. You can trend trade on a 5-minute time frame. You can trade on a 15, 1 hour, 4 hour, a daily time frame. The only difference is your stop losses will vary, right, based on the different time frames. But this is the thing that we have to understand. This is a guy that's trend trading, that's following the trend and is religiously trying to establish what the trend's doing and stay with that trend. But then you have the guy that does intraday scalping. Intraday scalping is someone that goes ahead and looks for short-term opportunities. It may be in the direction of the trend, but it could also be against the trend, which means that support and resistance levels are key and important for that trader because he trades it off those levels. Now, you get the scalpers that go in and say, I'm going to scalp it here. I'm going to look for my 10 pips on the trade. And then when I get my 10 pips, I'm going to close out. But if the market breaks this level, I'm going to go ahead and quickly reverse it. So I'm going to cut my position there. I'm going to reverse my trade and see if I can make up my losses on the downward move down there. That's in and out scalp in the market. And then you have traders that follow a certain rule, that look for support and resistance, buy and sell off this, and then use cost averaging to manage their risk instead of being in and out of the market. And that is the 3 different types of trading styles that are out there. Now, you can find any sort of strategy that can fit those criteria, and it'll be categorized as either a trend trader, a scalper, or maybe a position trader that's cost averaging in the market. Those are the 3 categories. So when we talk about contrarian sentiment, and we see that that 84% of traders are long on euro US dollar, this doesn't necessarily mean that if you are long on euro US dollar, that you are trading in the wrong direction. Because as a scalper or as a position trader, you're not really concerned about the trend as much. You're really looking for the short-term opportunity. So keep that in mind when you look at the markets, all right? Now, another thing here that is important to note as well, if you are a trend trader, then really you should be actually being bearish on the euro US dollar over the long period of time. Now, let's dive in to the euro US dollar. Now that I've spoken about that, let's go ahead and dive into that particular pair, and let's see if we can pull out let's go ahead and see if we can pull out some details here on the euro US dollar that we can use to establish what the market's doing. Well, take a look right here. Now, contrarianly, we are currently 85% or 84% long, which means that the retail traders are long, but the contrarian sentiment is bearish. Now, we can see the market is bearish on the euro US dollar. But what we as technical analysts have to understand is that the markets move between supports and resistance. It could come from highs and lows, could come from Fibonacci levels, it could come from all these different things. And so when you look at the market right here and you see the market at support right here, then contrarian sentiment says, no, we're bearish. And that's right, we are bearish. And if you go to a 1 hour time frame, which I'm going to go ahead and do and show you, you can see here that we're still trading below the 200, which means that, yeah, we are bearish. But the fact of the matter is this, is that even contrarian movements have short-term recoveries. And this is what we're currently going to go see on euro US dollar. Euro US dollar right here is trying to make its way back up towards this resistance. It's bounced off a daily support and is trying to work its way back up here. Once we get above the 200, if it goes above the 200, we may end up seeing that we're going to start seeing a slight shift in weight between the buyers and the sellers. And that doesn't necessarily mean that the contrarian sentiment would now go bullish. That just means that we're now seeing a change. Now, this could mean that a lot of the retail traders may go ahead and start taking profit or cut their losses, whatever it is, when price gets to this point. It could also mean that retail traders may have given up on this, the buys and closed out over here, or maybe even got stopped out, and now that's driving the market back up. It could be either way. But what we have to understand is that the market moves in different waves and cycles. And in order for you to be able to understand that, you have to really dig into the details of the technicals to actually get the long and the short as to how it's going to be trading between these levels. And that's how we can take advantage of these moves. That's why traders, when we came into the trading session today, it was very quick and easy for me to be able to understand what I'm looking for, because I look at the markets every day. And when I look at the markets every day, I have a certain structure that I follow. And based on that certain structure that I follow, I go ahead and implement these trades based on that structure. And so this is what I'm going to do. The secret of trading is going to be revealed in just a moment. Before we do, I have to go ahead and share with you one of our sponsors for today. All righty, traders. Well, if you haven't got a broker, make sure you check out ACAP. And if you do check out ACAP, there's a link down below. We can help you out. There's a link down below. Traders Network Club is going to be helping traders get started. So if you go ahead and open up a live trading account with a link down below, contact Traders Network Club at support@tradersnetworkclub.com. And what they want to do is they want to help you get started. And we're all about helping traders making money. And we're actually going to be releasing a hedge, or at least we have released a hedge strategy around what we're currently doing right now. And so if you're interested, make sure you reach out to Traders Network Club, support@tradersnetworkclub.com, or check out the online chat and get some more information about that and how you can get 33% off the current price for that product. Ask them about the hedge product and how you can get 33% off that product. So with that being said, I'm going to go ahead and take a look at another thing here. I'm going to talk about risk management. I'm going to talk about how to manage your risk in just a minute right here. I'm going to go ahead and pull up another pair. And I'm going to take something outside our usual pairs we follow. So let's go to, let's take a look at pound JPY. Actually, in fact, you know what? What about New Zealand? Let's see here. Do we have pound New Zealand here? Let's see here if we do. I don't think we do. No. All right. So we don't have pound New Zealand here. So let me take pound Aussie as an example. Actually, you know what? Let's do pound Canadian. Pound Canadian, we have a 62% long. Retail traders are 6% long. What do you think contrarian sentiment is? It's bearish. So let's go to pound. Let's go to pound Canadian dollar. And obviously, after the news that came out today, we would be expecting the pound to go bearish, and rightfully so. Check this out. Yeah, we have the pound setting up with a wave structure, wave 1, 2, 3, 4, okay, and 5 right here. So we've come up to a level of support. So this is the deal right here, traders. How do we trade? How do we trade this particular pair and get into this with good equity management? So the first thing that you have to do here is, number one, you have to understand what strategy you're applying. If I'm going to apply a once in, and I'm going to put a stop loss up here at the top, then I have to realize that if I do enter here, that what is my profit potential on this? As a swing trader, we generally want to go ahead and chase after a 1-to-3 risk-reward ratio, maybe a 1-to-2. So that would mean that if I enter the trade right here, I've only got about 98 pips of profit potential. If I put my stop loss above here, I'm looking at about a 90 pip stop loss. That doesn't really do well for me based on a swing trade. Now, contrarian cost averaging might be a little more effective, because there may be about an 80 pip rally here. So which means that the traders, if I go ahead and sell here, sell here, sell here, and sell here, I'm covering up what could be the retracement move. And if the market starts heading back down south, what I'm doing is I'm building up my position so that when the market does go back down to this point right here, I can cash out all of those trades. So this is how I'll go ahead and apply it. I'll go ahead and look to enter on multiple entry points. So what I'm going to use is I'm going to use this tool to go ahead and enter the market. I'm going to place my stop losses above. I'm going to calculate my risk. I'm going to use 25 pip entry points, and I'm looking for I'm going to look for a target. So I'm going to go ahead and set up a limit down here, and I'm going to go ahead and chase after that target. Let me see what that target is. 69.23. So my limit on this is going to be 69.23. So 69.23. I'm going to go ahead and fire this trade right here. And so what I've done here is I'm now entering the market, and you'll see here, I'm entering the market with multiple entry points right here, and I'm covering up this rally. So I'm covering up this potential rally here that the market could go back to retest it. In fact, I could cancel these two positions, but these two positions might be my way out of the market if it goes higher. So if it goes against me and goes higher, I could get out at a smaller loss before the market turns around. So this will almost be, if the market takes out this trend line right here, this is actually telling me that we could see a reversal and price is going to move back up higher. So that's almost like my backup plan. So now I'm in, and I'm looking for profit down here around about 69.23. And so traders, what I would be doing here is I would be holding this position and looking for price to move down. And what I will be looking for, if the price does go back and trade back above here, I'll make sure that it's holding up at this support level and previous now currently resistance. And if it does break out north, I would then go ahead and start looking to reverse the position and looking to trade along, which means on the first correction move, I would look to go ahead and cash out. That is called an always-in strategy, using cost averaging, but also identifying market swings and applying trade opportunities based on these market swings. Traders, when it comes to equity management, the most important thing is when you're cost averaging, there are many ways that you can go ahead and decide on how you want to manage that risk. Number one, you can manage your risk based on an overall risk percentage. So which means that if you say that you're willing to risk on a trade, let's say 2-3%, all right, 2 or 3%. Then if the market gets into a 2 or 3%, then you cut your losses and you start looking for something else. That's number one. Number two, what you might want to do is you might want to reduce your risk on each trade. So it allows you to get into multiple positions so that if the market does reverse, you have enough entries to allow you to be able to get back out at break even or make even some money on that trade before you reverse it in the opposite direction. The problem is with traders that over leverage themselves initially. If you add in and you over leverage yourself, then you can only put in so many entry points, and you will then get to, if the market moves against you, you will get to your 2 or your 3% overdrawn level. And so in order for you to be able to ride the wave, as we say, in order for you to be able to ride the wave, then what you may want to do is you may want to be able to reduce the risk of entry points so that when the market does go against you, you have more entries that can help you keep price close to your break, or at least keep price close to your break-even point, so that if the market is reversing, you have a shorter trip towards your break-even to make a decision to either get out of that trade or close out with a little bit of profit on that position. All right? It is. Hopefully you guys enjoyed the session today. I do apologize that Cameron's not here to go ahead and battle it out. Let's go ahead and do a quick revise on the positions that we have. And let's see here. So our US dollar CAD position, we haven't moved. We're slightly in the money on our US dollar CAD. In fact, I'm going to go ahead and take a look at our trade right here. All right, so US dollar CAD, we are slightly in the money on US dollar CAD. New Zealand CAD, we're at break even. And then our CAD Swiss, we're at break even. And our Aussie CAD, we're at break even. So since we've entered, we haven't really seen the market move as much. So we'll see how this plays out. If you want to follow those trades, check out the Telegram down below. And go ahead and get activated on that Telegram channel. And you'll get all the trades that we implement. Traders, have an awesome weekend, and we'll see you guys next week. This is FxBigDog signing off.